For most of us, a life insurance policy is that document we sign, we file it away, and then honestly, we try not to think about it again. But in the DACH region, that's Germany, Austria, and Switzerland, it's a whole different ballgame. It's treated less like a simple safety net and way more like a powerful financial tool. So let's dive into how it's used to actually build and protect wealth.
And this quote from Swiss economist Dr. Pooyan Ghamari, it just nails it. It's not about being a safety net. It's a strategic tool, a lever that can actively shape your entire financial life. That's the mindset shift we're talking about today.
So you really have to ask yourself this, because the difference between those two perspectives, viewing it as just another passive cost versus an active asset, that is the key to unlocking its real potential.
Okay, so what is the real purpose of these policies? If we look past the simple death benefit, you start to see how they're woven into much bigger financial strategies, especially in the DACH region. Well, here's the fundamental idea. In these countries, banks and, the really savvy investors, they don't see life insurance as some kind of afterthought. Not at all. For them, it's a core component of their financial architecture. And look at this. The scope here just explodes way beyond just replacing income for a family. We're talking about securing cash to settle an estate without having to do a fire sale of property, or making sure a business can actually survive after a key partner is gone. It becomes this incredible, multi-purpose financial tool.
Okay, so to really use this tool effectively, you've got to understand its core parts. So let's take a look at the 3 foundational pillars of life insurance in this part of the world.
All right, let's break these down. First up, term life. That's for pure protection, right? But the strategic play here is to negotiate for the coverage you actually need, not just whatever the bank is telling you to get. Then you've got whole life, which combines protection with savings, making it a beast for tax-efficient wealth transfer. And finally, pension-linked policies. These can be an absolute powerhouse for retirement, especially for expats, because of the massive tax deductions. Each one has a very specific strategic job to do. All right, so you know the policies now, but knowing the product is only half the battle, right? Now we get into the negotiation game, and this is where understanding the fine print separates the savvy investor from, the passive buyer. This is the question you've got to ask, because buried deep inside those premiums are costs that can just silently eat away at your policy's value over decades if you're not paying close attention.
Think about it. Acquisition costs can crush you if you decide to cancel early. Those management fees, they might look tiny year to year, but they compound like crazy over time. And surrender penalties, they can basically lock you into a policy that doesn't even fit your life anymore. These are the details you have to dig into.
And here's the crazy part, or maybe the best part. The transparency is often there if you just ask for it. In Germany, for example, insurers are legally required to give you a full breakdown of their costs. The fact that most people never bother to ask, that's exactly why this knowledge gives you such a huge edge. Okay, so let's bring this back down to earth and talk about something tangible, like real estate. A policy can be used as a financing tool. It gives your heirs the cash they need to pay inheritance taxes so they don't have to sell the family home. It can even make owning property in different countries way simpler. See, the policy is designed to work with your other big assets.
Okay, we've covered the what and the why. Now let's get into the how. It's time to shift from being a reactive buyer to a proactive, savvy investor who has a clear plan.
And this, right here, this is the entire mindset shift. Most people operate backwards. An event happens, like buying a house, so they go get a product. The strategic approach flips that completely. You start with a goal. What am I trying to achieve? And only then do you design an insurance solution that's tailor-made for that objective. And here's how you do it. It's a simple framework. First, define your objective. Is it protection, inheritance, retirement? Second, quantify it. How much do you actually need? Third, compare your options. A Swiss policy might have different perks than a German one. Fourth, negotiate everything. And finally, and this is so crucial, review it every 3 to 5 years. Your life changes, and your policy needs to change right along with it.
So, as we start to pull all this together, let's really cement this new perspective. We're moving away from seeing life insurance as a simple cost and completely reframing it as an active engine for your wealth.
This is the real game changer. When you start to view your policy as an asset class, right up there with stocks, bonds, and real estate, you start managing it with that same level of strategic care. It becomes a predictable, controllable piece of your portfolio. So what do you actually get from looking at it this way? Well, you get guaranteed capital, which is incredibly valuable when markets get volatile. You get tax-sheltered growth. You get liquidity to make sure your estate planning is smooth. And in a place like Switzerland, it can even be the foundation of a really strong private banking relationship.
Which brings us back to this really powerful idea. It's not loud, it's not flashy, but when it's structured the right way, your policy is a silent engine, working away in the background, powering everything else you're trying to build financially.
So you've seen the blueprint, you've seen the architecture of how this works. The real question now is for you. Is your policy just sitting there, idle? Or is your financial engine turned on?